Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Merck stock so we can determine if it's a buy or a sell. Merck develops and produces medicines, vaccines, biologic therapies, and animal health products. Its biggest revenue generating drug is Keytruda, a humanized antibody used in cancer immunotherapy. They do have several drugs that generate over $1 billion in annual revenue. The company is headquartered in Kenilworth, New Jersey, and was founded in 1891. Let's get started with the model. This is a large cap company, 298 billion market cap. They're trading at 118 a share, and they have 2.5 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They have tons of free cash flow, and its highest in 2022, close to 15 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also highest in 2022 at close to 15 billion. Revenue is a sales for the company, and that grew steadily from 2019 to 2021, then jumped up a lot in 2022, close to 60 billion. They recently released their first quarter financials. For the first quarter of 2023, they had 15 billion of revenue. That's down from 2022 of 16 billion. I'll show you a breakdown of this 15 billion. A little less than half their revenue comes from the US, 3.3 billion from Europe, Middle East, and Africa, 1.7 billion from China, 850 million from all Asian countries besides China and Japan, 750 million from Japan, 660 million from Latin America, and 545 million from other. Their revenue is down in most categories except China. It's up quite a bit from 1.1 billion to 1.7 billion. It's up about 10% in Latin America, but their revenue is down quite a bit in the US and EMEA. Of the 14.5 billion of revenue, almost 6 billion is from Keytruda, 3.5 billion in the US, 2.3 billion international. Keytruda is in the oncology category. Oncology is for the treatment of tumors and cancer. Their next biggest drug is Gardasil. That's close to 2 billion. You can see they have drugs in lots of categories: cardiovascular, immunology, diabetes. They also have animal health, 1.5 billion. So you can see their international revenue is higher than the US, and that totals to 14.5 billion. Let's go back to the income statement. The cost of revenue, all the expenses directly related to generating the revenue, is 4 billion. That's the cost to make the product, the payroll to the employees that make the product, selling, general and administrative expenses. This includes marketing, that's 2.5 billion, R&D, 4.3 billion. So 10.8 billion of expenses. Their operating income is 3.7 billion, down from last year of 4.9 billion. 800 million of taxes. So net income is 2.8 billion. EPS is 111, last year was 170. Let's look at the capital structure. 46 billion of equity, 31 billion of debt. They're 60% equity, 40% debt. Their net debt is 17.5 billion. That means they have about 13.2 billion of cash on their balance sheet. They have a WACC of 8.3%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 306 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $275 billion. We divide that by 2.5 billion shares. And we get a calculated stock price of 109. They're trading at 118, so they're trading at an 8% premium. It's a sell according to the model. Simply Wall Street's at 199. They say the stock is 41% undervalued. 19 analysts priced this stock, and the average price target is 123. The low is 99, the high is 130. 27 analysts priced this stock, and the average price target is 123. They say the stock is 5% undervalued. This is where the stock has been trading since 2002. In the beginning of 2002, the stock was about $65 a share. Then it fell below 30 in 2004, 2005, and also in 2008 and 9. It looks like it got down to about $15 at its low. So if you bought it in 2002 at 65, You would need to wait 17 years for the stock to get back to where you bought it at 65. You would receive dividends though, so it's not like you get nothing. From 2018 to 2023, the stock nearly doubled. It's at its all-time high, currently trading around 118. Since 2002, the S&P 500 is up 280%, while this stock is only up 80%. They pay a quarterly dividend that they raise each year, up to 73 cents a share, a yield of 2.5%, which is 50% of their free cash flow, 51% of their net income. There are 15 companies in the same industry as Merck, and if Merck has a number in red, they're worse than the median. If they have a number in blue, they're better than the median. They spend more than any company on this list in CapEx, including Johnson & Johnson. They have a good debt to equity ratio, better than the median. They do pay a lower yield than the median and average. They generate lots of free cash flow, a little less than Johnson & Johnson, a lot less than AbbVie and Pfizer. They rank third in market cap, close to $300 billion. They are a good amount behind Johnson & Johnson and Eli Lilly. Their price multiples are worse than the median, but not that much worse. Their PE is just a little worse than the median. Same thing with the price of sales, a little worse than the median. They generate lots of revenue, $59 billion, and their 5-year annual revenue growth rate is between the median and average at 7%. So to summarize, they've been around 122 years. They're a cash cow. They bring in so much revenue and cash flow, they can consistently pay a nice dividend. For a long-term hold, it seems great. I rank their free cash flows and revenue 9 out of 10. Their ratio is 4 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to become a member, you can click on the link in the description below. Thanks for watching.